At the start of this week, many of us were concerned about Jerome Powell's speech. As it turned out, we were correct, and he really brought the hammer down on inflation, claiming that they are not necessarily done yet and that interest rates might have to stay higher for longer. It's almost a joke at this point how many times the Fed will flip-flop each way and the market will interpret it. But more importantly, what does it mean for us as traders and investors in these markets? While the S&P 500 reached one of our highs that we thought could find sellers, the concern really is more in the smaller stocks. And today we go through history and the massive change in economic sentiment reports that we've seen over the last week. It's going to blow your mind how big people are flip-flopping in these markets. We also need to discuss this point here, the central bank injections. They tend to be something that we look towards with driving whether we're going to get positive or negative sentiment, and they're continuing to move forward. Meanwhile, the change in interest rates after Jerome Powell's speech has brought treasuries back down, and Tesla almost filled the gap to a very important point for buyers. Join us now as we cover stocks, commodities, and cryptos together. Well, welcome back, everybody, to the Daily Show, where we look over the macro, the lead indicators, and the hottest charts. I thought we'd start here by talking about the market year to date so far. And this is really the health of the market. Take a look at this. My favorite stock in the market, 50% up. Microsoft, Nvidia, 221% up year on year. And then we can see here Google, Amazon, Tesla, some amazing gains. But what you're going to clearly see is that healthcare, consumer staples, energy, and other sectors of the market actually have not been performing very well this year. And it shows you the tale of two markets that you're probably already partially aware of. Here's a great way of depicting that chart. This is NASDAQ new highs minus new lows. And what you'll notice is that a lot of the time while we're recovering, the NASDAQ overall is not actually picking back up. This is because between 7 and 14 stocks in the NASDAQ 100 are actually running everything. We've all heard of the Magnificent Seven, but there's actually a few extras that come with it. Once you take out the top 14, you don't have as much breadth as you might think. And where does this play out? It really plays out in this statistic. And this is the one that history will really show us whether we're going to be strong or not. When we have a bear market, usually 1 year after a bear market, we've seen strong recovery in the Russell 2000 and also the equal weighted market index. We have not seen either of those things happen so far in 2023. And this is becoming a very important point. We need the Russell 2000 to start to recover, to really believe in all of these breadth and thrust and every other type of indicator that we've seen. So are we going to get it? Well, here's where the problems start. Take a look at this. I told you it would blow your mind. And when you see this and you think about last week, I haven't seen a flip-flop like this in a long time. We posted it over on our Twitter X account, links in the description down below, and it shows you that people have moved from mega bearish only a week ago to mega bullish. And this is a bit of a problem. It kind of really calls for a pullback to be occurring in this market. 42.6% of people responded as bullish after being 50% of people being negative the week before. I just cannot think of a time where it's been this much flip-flop. Here's the AAII bears with S&P 500 overlaid, and you can see it's kind of a contrarian indicator. When we saw everyone turn bullish recently, what happened? We got near the highs. We looked for the technical signal and we saw sell-offs. Then we got this huge bear reading and we saw a massive squeeze. Now we've just got a really low bear reading in comparison to where it was. So it's probably due for a pullback. And Jerome Powell is kind of orchestrating this pretty damn well. Here's another way of representing how the economy, or how, let's call it the stock market, is actually seeing the health right now. And it's all been about AI and tech. The SPY is being covered by the tech companies, really. And when you take out those and you think about equal weight and you think about IWM, that's the Russell, they're really just not performing well for this year. So again, it's nothing new, but it's an interesting stat all the same. Now, 30-year bond yields and tail risk was all over the place thanks to Treasury new issuance. And basically we see here that we usually expect from the November 6th to 26th period a positive correlation for TLT and of course a negative correlation for yields. If you go back through history, you usually have a bit of some movement down in yields overall. And that's still what we're expecting over the next coming weeks. But that wasn't what, of course, happened over the last 24 hours. Has the Fed finished their rate hikes? Well, look, Jerome goes backwards and forwards. I mean, this just reminds me of we're going to use all the tools. Remember that discussion from a few years ago? Now it's inflation's here, inflation's gone, inflation's everywhere. Look, realistically, he says the same thing. The market is just changing narrative all the time. But it still makes sense that we may have hit the pause button. We're 1 month and 3 months into now, and even more into actually having a pause on hikes. And traditionally, when we get into this many pauses, we usually have seen close to the top. So again, the stats are pretty positive for a 12 months if we have actually seen the highest point for the Fed. And of course, Jerome Powell might say we need more. We'll find out whether that's actually true. Here's where things turn better for the bulls. And it's got to be this way, double breadth thrust. I mean, this is a big deal. It's pretty rare. It doesn't happen very often. You can see in history, it's only happened a couple of times. 1950, 1962, 1975, and of course, 2023. And when you get a double thrust within that kind of 12 to 18 months, you tend to get an incredible gain over markets over the next period. Now, you'll also notice that a month later, it's 94.1% bullish. And then 6 months later and 12 months later, it actually has never failed. Now, will it fail this time? Of course, stats are made to be broken, but ultimately very, very bullish there. Here's the standard chart for it. And of course, here is something else that we've seen happen on markets recently, which was an incredible strength sessions. We had so many bull sessions, bull session after bull session after bull session. When we tend to get these kind of massive runs, we do have pullbacks. Now, you'll actually see in history, the pullbacks aren't that much. I feel like maybe this time we're due a little bit more, and that will play in well with some of the key levels that we're going to be looking for. But a lot of it has to do with sentiment. And of course, you're going to have to leave your opinions at the door because this is going to come down to price action and pure market movement. You're going to be needing to be aware where you've been trapped and when the market is set level. So of course, make sure to subscribe to the channel. We'll be covering all of those together as we go through this journey, which is going to be a big one. I think 2023 to 2024 is going to be more trader years and a lot of interesting times in these markets. Here's the Russell 2000 after cycling from 52-week lows. We saw this stat around a week and a half ago now, and it really brings up this idea that have we just entered into a change for the Russell? The first time that we tend to see that next 6 to 12 months later having strong records and super percentages. It is really time for the Russell to start to play the game, and we'll look at the technicals later on in today's video. Here's what we expected for this month. So far, so good. I'm going to give it a tick of approval so far because, of course, we rallied up. Now we're seeing all sorts of weirdness happening in the market, which is pretty normal. We usually drop off. And then somewhere around that max pain, which is the third week of the month, we usually start to see a bottoming effect going into a large rally. If this thing's going to play the standard seasonal into maybe a Santa rally, then we will hopefully see a rally at the end of this month, and we'll find out whether we can get that. Few earnings this week. Of course, keep on your earnings charts. Always be aware of all of the movements coming through. And we saw Disney really the surprise one this week. A few people have asked me about gold. Let's just clarify this because I got a huge amount of people. People say, Tom, your chart's out of date, man. 1860 was ages ago. Yeah, it's just a point. So remember, this is about what usually happens at these areas. We already know that gold moved up $140 from this point when we first reported on it. So, of course, quite a while ago. And it just shows you, though, that when we get reads like this, of course, the percentages can be quite good over the next couple of months. Never expect the market just to go vertical. Too many people just get used to going, oh, it just has to go up. We're going to see 300% gains and then it'll go down. That's fine. But I expect it to go up every single day. The normal market movement is 2 steps forward, 1 step back. So just remember that is fairly normal and few people freaking out. I haven't really changed my opinion on gold at this stage. I still think it could be bullish on the medium term from the TA standpoint. Let's have a look here at some big trades that have come through. Of course, the Russell in focus. We saw a large trade when it came to the Russell in the previous session, but we've also come back down into these lows. So the Russell 2000, right where it defended last time, we know that was a dark pool transaction that happened around this level, and we get another one here from the perspective of the actual Russell 2000, not just the small caps. Again, being defended at this zone. Very important that we do find a flush here or we see some type of trap. I'd like to see the Russell recover, maybe take a new low first is okay. Let's move down to the options, and it was on. I mean on big time. 41.65 million versus 39.6 average. Volume average has actually increased in options recently, and we had 52% calls to 48% puts. So it makes sense why we would go down. We had a little bit more calls. Remember, we've slowly been seeing the shift here of calls being a little bit too excited at these highs And yeah, it's exactly what we were looking for. Now, what's happened on the Russell? I always like looking at the Russell one. You can see here 1.46 times, 721 to 960, fairly even in terms of bulls and bears. Some other notables here that came through over the last 24 hours were on some of the major stocks. Of course, LLY getting a 4.5% down. Disney finally getting some bull hits here, 362, 2.86 times volume to 203,000 puts. So some strong kind of buying coming back into Disney. And I think this could be a catalyst for a kind of like an upgrade run, really, on the big stocks. So we'll have a look at that later. But I think that Disney might have actually just seen a low. It's very possible here. Let's move over to the tech stocks. Regardless of what you feel about it, remember, it's TA. You're looking at price action. You're thinking about fundamentals. You're thinking about stats, that type of thing. When we look at the 5-day average, semiconductors and tech and home builders are still the winners. But if we look at the last 24 hours, well, it tells you a little bit different story. Of course, communications, semiconductors, XLE, gold, they were the ones holding up better. The worst was clean energy, solar, biotech, really things that are susceptible to yield. So these are all the yield plays, including KRE. There's nothing wrong here at this stage, which is what we expected. And of course, with the Fed injecting the way we did, they are still, which we saw at the start of this video, it makes you think, well, maybe it's just the normal kind of pullback that we expect. I mean, they managed to convince everyone the market was bullish. Wouldn't it be perfect now for them to flush out a few of those bulls, get rid of some of those calls, et cetera, et cetera? Percentage of stocks above the 20 dropped off to 64.49, but still pretty strong. Here's the percentage of stocks above the 200. Still, we didn't get above 40, which would have been nice, but yeah, still okay. Skew didn't really move, so nothing there from that point of view. And US 30-year did raise back up, but of course it found itself at this little bit of resistance. So I do still think that we've seen a first time frame change for the yields across the 20, across the 10, across the 30. We'll see whether the price action's right. The narrative could be either way. You could believe that there's still higher rates in there and everything. I'm just going to go with the TA has told us that there is a potential here for a turn. And of course, now we need to find out whether it's going to be one of those stupid Wyckoff kind of concepts where it's slower and takes time, or whether this is actually all it is, picks up and then starts coming down pretty quickly. We really haven't seen too many of these. Another false read was down here back last year. And really, that's the only other false read. So other than the one that we got back in August of last year, which, by the way, if you had believed that that was a real read and you went into the market around that time, it wouldn't have been that bad because you would have been close to the lows. This is another period of time that's very important. When we look at treasuries, of course, sold off from this 50 moving average. I still think treasuries have done really well recently. Huge amounts of course, volume coming through. And look, it's still very, very popular. It's a huge trade, lots of bulls, lots of bears, lots of people with different opinions. I don't mind if it comes back down. I think it's created a really nice structure and things are looking, I said this in our private community, links in the description down below. I said, I think it's the best I've seen it for a very, very long time. In fact, I was looking through the last kind of like all the 50% drop and I could only really find one other time that it looked like it actually had even found a bottom. So this is still an important zone, and from a technical standpoint, something we'll be focused on. Let's move over to central bank liquidity. What's going on with central bank liquidity? What's going up? While the market's coming down, it's going up. But don't worry, Jerome's going to higher for longer, guys, higher for longer. Look, this is the thing. We have been seeing injections recently. I think something's broken in the back end. We just don't really know what it is. Well, there's many things that are broken, no doubt. So you've got to kind of bet on the central bank doing whatever they can to support the economies, and they tend to do that. That's what we've seen them do. So the market kind of knows it. In terms of recessions coming, and the word recession, US 2-year must go underneath 10, and we must actually start to see an inversion of yield. That has not happened yet, so we're usually quite a few months away. We talked about unemployment. Dow Jones Transportation Average Index actually dropped, which is, of course, a negative sign for markets. So that's the first negative. The second negative was home builders coming back through to down, so showing us that we might get a little bit more of a pullback in this market condition. And copper kind of held steady. So okay for the metals at this stage, holding into that zone. Let's have a look at the US dollar. So the US dollar came back up. And it was a little sneaky, I got to say. This was I could see why it did it. But yeah, look, I had a little alert underneath here and it set it off. I didn't actually see it because I was asleep. But it's a late time. I'm here in Australia. It's obviously very, very late when this went off. But that was a little sneaky. It didn't quite clear everything that I wanted. But yeah, this was sneaky by the dollar index traders. So what they managed to do is push it back down. Then, of course, they've rallied it back up into this supply. Dollar has been an interesting trade. As you can see on the weekly, if we go back over to the weekly, we closed right on that level that was pretty key. Then we've seen buyers come back in. Now, that's okay, and I still think that there are sellers in here, and this could be the end of the trend for the US dollar. But Jerome Powell really put that rocket under it because, of course, yields started to spike. That makes dollar more attractive. And then, of course, the rest of the currency is a little bit less. That pushes into the Australian dollar, which obviously we have not seen any move. I brought this up in the last video just to talk about it because I think it's key. I've still got an alert at 64.50 showing us that that's where I'll be going or thinking about bullish on maybe even a multi-month for the odd in terms of the way I think about it from a technical standpoint. But yeah, strong dollar certainly pushed that back down. RSP, equal weighted market, coming back. No surprises. Supply, we spoke about it literally every day this week at these levels. So certainly where we thought it would pull back, and that's fine at this stage. We'll move over to gold. Gold found some rally, still not through 1972. So I'm not going to say it's bullish yet, but we'll keep going back to that. We'll see how it plays out on Friday. So at this stage, it's on the small timeframes down and not bullish on those. Same thing with oil, small timeframes down. Notice that this is actually a drop-based drop. So we have the drop and we've got the base supply. We tested that and we dropped again. And at this stage, we could be going to most traded zone number 2, which is at 73 a barrel. So if that falls, let's say, to 68 or lower, I think that's going to start becoming a bit of an issue for the market in terms of growth concerns. At the moment, this is kind of a positive to just kill inflation off because, of course, a huge part of inflation is energy. And as you can see, we've gone from like 92 down to 70 something. Anything between really here and here is okay. If it gets too much on the extreme, it's showing us that the economy might be weakening more than we expect. And of course, then the Fed would have to come in and every other central bank would have to come in and bring in the juice. Tesla, big one. I'll call it close enough to fill in the gap. I know it hasn't, and some people will say, well, I didn't fill the gap, but let's go near enough, close enough. So this is a pretty big deal. For Tesla buyers, you can see they came in a little bit near the end here. I'm not sure if they'll be able to hold it up, but this is definitely the zone that buyers would be committing to, and they'd have stops underneath here. If Tesla does end up taking the lows, then we're going probably a bit lower on Tesla, and I'm talking like could be kind of bad. Could be going into the 165s and stuff like that. So very important it holds. You can see here there are a few different indicators that are loading around this zone. And it's one of those areas where Tesla needs to find buyers and they need to find them stat. Let's hope they can. Disney, really strong weekly if it closes like this. That's actually the monthly, but let's have a look at the weekly. This would be a pretty big deal. First good sign in Disney in a long time from a price action standpoint. We've put a base in. We talked about this level a lot. This was like a 2014 low, so it's a serious deal for investors. And that's a strong catalyst. So while we might get pullbacks from a strong catalyst, that's the type of thing that you want to see. Now, in terms of upgrades, let me see here if we've got any upgrades coming through yet. I didn't look, but usually I would focus on that just to see. And you might say, well, why do I care about upgrades? It changes the game in terms of advisors investing into the stocks as well. So I don't see here any particular news that's showing us upgrades, but I expect them to potentially come through. And it does look like there are some that will probably come through, but I haven't got those yet. So I expect houses to upgrade Disney, and that could be a good sign for the stock as well. We'll talk about that more on the weekend video. KRE, regional banks, coming back down. Good. That's kind of what we wanted. So again, did we get a nice rally? Yes. Was it good? Pretty good. Did we pull back then? Yep, that's pretty good. Remember, we're looking in this $40 range. Gap fill for KRE, possible buyers recommencing on the financial sector, because this is, of course, a lot of the lifeblood of most of the countries out there in the world in terms of debt and creation of debt and all those things. We need to see these finances really starting to thrust up if we're getting a market rally. Here's XLF, not down as much, which is to be expected. Regional banks are going to get hit harder. The Australian market coming back down. It's going to follow the American market. Very tough here to say exactly what it wants to do. I'd say the American market might come lower. So therefore, we could see the Aussie market back down in the 68, 70s and stuff that we talked about in the previous session. German market's the same. New high. Where you're going to mark out underneath here. I'm going to mark an underneath low. If that happens, then we might be going a little bit lower for time period, and we're looking for that type of thing. So again, German market, not as good as the US 500. The Chinese market is nowhere near the difference of the others. It didn't get through our 38, so we're looking for that to recover through 38 to give us a bit of Chinese New Year cheer. We have not seen that rally yet come in, so we'll be watching for it. And here's the US 2000, very weak. You can see it's horrible. Now, there are some large transactions that have gone through, which is a positive sign, but just no sign. We've talked about that 1810 being a super critical level here for Russell. I've still got alerts there for a valid reason, and we have not seen recovery in the Russell 2000 on the smaller timeframes. So what we're really looking for here is we need to see this thing build some structure. We do not have that structure yet. We don't have a break of a new high. We've got lower lows and lower highs. That's not really conducive with strength. So instead, we've got to go to the other markets. Let's have a look at the NASDAQ. It's still very strong. It hasn't even really breached too far down. So the problem with the NASDAQ is it's right around that area where you could see initial buys. Next stop could be 14,800, which is that last demand. But I like the S&P 500 when we're talking about this. So we kind of speculated that we'd get a gap fill. So the S&P 500 came up to 43.96 on the futures. Then it sold. Now, there are plenty of reasons to not like this market right now in terms of the way that it sold. Jerome Powell comes out, hammers, puts the hammer down. I'm looking for a rally after that hammer. Ideally, this is actually where you see selling come through, and I'm looking between 42.80 and 42.40 for market structure to be recommenced in terms of buyers. I don't know if there's that much buyers through here, although it might kind of do like a thing like this. That would be kind of like ideal if that occurred. So this is the type of thing I'm looking for markets to come back down to these levels. You'll notice I'm starting to stack a bit of confluence around there, which is always something I do try to do. And we're trying to build a storyline that plays out this narrative. And the narrative is, of course, oh, we've hit the top of rates. That's fantastic. Look how good we are. Rally up. Okay. Then we hit the top of the trend line. We get slightly through it, convince everyone to go bullish, which we suspected might occur. And then we pull back, allow more liquidity to come in. And then ideally we'd see rally here. Where you're going to start getting concerned is if you get into the lower third quadrant of this pool. If that starts to happen, yeah, there are issues. And if we get another new low, very strange times ahead. So at this stage, based on the breadth, based on the thrust, based on everything, we don't mind a pullback. That's perfectly fine. If we get nice deep one, comes into this area, that's perfectly fine. Do we want that to then make a new high? Yes. If it does, is that super strong? Yes, it is. I think that's very, very strong from the market perspective. So very important level. Jerome annoyed everyone in the market, I'm sure, but ultimately it's kind of what we talked about most of this week. When we move over now to Bitcoin, what's going on? Bitcoin, actually, I just want to talk about this advanced declines. We can see here the advanced decline on the market was weakening, which showed us, again, weakness across the board. But let's go over to Bitcoin. We say don't short a dull market. This thing still is dull, and it actually made its way up to almost 38,000. So is that one of our TPs yet? Not really. I still think it's got maybe more in it. Could go just below 40,000. And then after that, could be 46,000. So the thing with Bitcoin is we don't know it's gone to a high. It's just slowly making a series of higher highs and higher lows. And until that changes, we can't really be sure that this thing is going bearish. Another big breakout star was, of course, Ethereum making a big run for it. And this is normal. You usually see Bitcoin go first. Ethereum kind of catches up, 14% in only a couple of sessions. So yeah, crypto is on fire at this stage, and there might be a little bit more to come for it. In terms of the end of this week, what do we have? Prelim UOM consumer sentiment, and that comes out at 10 a.m. New York time. As always, if you enjoyed today's video, make sure to subscribe, smash that like button. We'll see you in the next one. Bye for now.